Hello everyone, welcome back to Education Wing. I'm your host here, Kelvin Yup, and going through the education with you guys, sharing some of the investment idea that you could actually apply into your investment portfolio. So today we're gonna look into something that I think most of you are wondering, okay? So you have seen a lot of news like saying that whether US Federal Reserve is going to cut the interest rate and how this Federal Reserve cut their interest rate and is going to affect Malaysia market, right? So here are some of the tips, okay, that I'm going to share with you what kind of stocks that we can invest into it, and also how do we know when will Federal Reserve cut their rates. Why? Because they are the big boys, and if let's say they cut their rates, and Malaysia will have to react to it as well. Not just Malaysia, most of the country have to do that, because if the rate in Federal Reserve is lower, then they might actually affect the exchange rate for, let's say, the Malaysian ringgit might move up higher, then it will hurt our export. So that's why to have the same on the same table for the world economy, so Malaysia Central Bank, which is the Bank Negara, they have to adjust their interest rate also. Okay, so right now, as you can see here, Federal Reserve, how do they judge whether they are going to reduce the interest rate? So there are two things over here. First is inflation. Second will be the labor market. So if let's say a labor market is not doing so well, and they will want to actually put up more funds to the market for the corporates or maybe for the individual to have more money to hire people or maybe do business or the capex as well. So first thing, let's look into the interest rate cuts, okay, based on the inflation here. So from here, we can see since March 2022, after the COVID, Federal Reserve has been increasing their interest rate, okay, to curb on inflation. We all know during COVID time, there's a lot of central banks in the world. They are trying to save the economy. They try to reduce the interest rate, and also at the same time, they are printing out more money and inject into the market. That caused the inflation to move up higher. So this is the idea here. So you might not understand why inflation actually move up higher. So as long as there are too much money in the market, then inflation is moving up high. So same thing goes to our local market here in Malaysia, where we find that, hey, how come recently in the past few years the prices of every goods and services are increasing tremendously? So that is because there are too many funds in the market, and is actually too much of economic activities that is going on is pushing the price up higher. Okay, so 5.5% is the highest at the moment for Federal Reserve for US side. So this actually have in history of the interest rate, we always thought that interest will always go down lower and lower and lower. So up until like for Federal Reserve, they were at almost close to 0% for their interest rate. So right now they are moving back to 5%, and at the same time, Japan side, their economy, the consumption confidence, consumer confidence, it was really low in the past decades, and right now it's starting to boost back up higher and allowing Japan to actually increase their interest rate away from the negative territory. So that's why with this high interest rate, okay, just to curb with the inflation, and then up until this year, the US have seen that the economy is not doing so well. It was really good right after the COVID, because that is where the money is going into the market. That's where you can see the stock market are moving up higher, and you can see that the inflation is moving up higher as well. So they have to increase the interest rate, maintain until 2024. They see that the inflation rate was at 3.3%. Okay, so 3.3% is considered high. So usually for most of the central bank, they will try to adjust it at around 2%. So right now what we can see is that the most recent data that is showing in Federal Reserve, the inflation rate is about like 2.3% or maybe 2.4%. So it's just not far away from the benchmark, okay, from the 2% that they are looking for. So right now what they are trying to look into it, other than inflation, they are looking into labor market. Labor market, people are not hiring, are not getting jobs. Why? Because corporate have to use excessive funds or their profit to pay for the higher interest rate, because this is how they cope with the the inflation, right? Because bank side, the corporate finance, everything, they have to pay more, so they have to slash job, okay, and get more money to pay for the finance. So right now, if we see that the economy is not moving up that much, okay, so it's stable but it's not doing that well, then this is where the Federal Reserve come in. They want to reduce the interest rate to push the market again. So now, remember, if I share with you guys before that this Merrill Lynch economic cycle, so we all know that during the time when it's overheat is when the COVID time, when there's a lot of money being injected into the market, and then it's overheat, then suddenly the inflation is there, and then early of this year, beginning of this year, it was in the stagflation with growth weak as well. The growth is weakened, so stagflation. So what you can see is that if you look back into Bursa, the trading price history of like those utilities, pharmaceutical, and maybe some of the oil and gas, their price are being moved up a lot, right? So right now, what is it right now? So what we can see here is that inflation is falling. So when it's falling, then when it hits to a point that when it's falling, so means that the growth is not, there's no growth, right? The growth is not moving up higher. So that's where the central bank comes in, intervene to pump a bit of money inside, and or maybe lower the borrowing cost for the corporates. So when they are lowering the corporates, the interest rate for the corporates, right? So which one will get benefit out from that? Financial sector. Okay, so that's why recently you can start to see like financial sectors are moving up, are pushing up higher. That's what we know. Okay, that's what we can see that. Oh, okay. In lower interest rate, then the money will go through all these financial sectors, and these financial sectors, they are going to get benefit out from there, and they are able to give out more loans, they make more money out from that. Then second one is the consumer staple as well, but that will be at the almost the end. So then or maybe consumer discretionary. So this is where we start to see the reflation. So when, of course, the interest rate, if they adjust just one time, reduce one time, it might not have that kind of effect. If let's say they adjust twice, getting lower and lower, then you can start to see the whole economy start to pick up. Okay, so right now, where are we? We are currently at the reflation era. Okay, so at the beginning of this reflation era. So this reflation here, how long will it take? Probably 6 months, okay, or maybe 3 months at the shortest time. So, but right now it's just that we see the central bank or maybe Federal Reserve, what they are doing is they are just going through the first rate cut. They are not going through into a second rate cut yet. So first rate cut is just a good sign, okay, a starting sign that the reflation is coming back, but we still need to see how the market it is. So if we see the reflation, financial sector is going to benefit. So is this the right time to invest into financial sector? So we have to see whether the growth has any recover out from there. So at the moment, we do see like inflation is falling, and we do see like even China, US or India, their GDP growth is not that high and is not growing, is growing in a very minimum percentage. So that's why all these central bank, they are trying to do this. So financial sector, you know, okay, most of us for Malaysia market, we know which are the financial sector, we can look into it. Banks or maybe like insurance company also consider one of them, and then or maybe like some of the non-bank, okay, financial sectors, financial companies, then you can also look at it. But of course, the main one that is going to get benefit from that is the financial sector. So if we see this reflation is coming, so right now maybe you can put some of your portfolio, allocate some of your funds, okay, in your portfolio into much more heavy in financial sector. Consumer staple might not be a good one, or maybe pharmaceutical, because this is the time where it starts to have the reflation. So reflation is coming back, so which means that it's the end of it. So you can see from this cycle here, from the outer layer to the inside. So what we can see here is that the financial will have get the most benefit out of this reflation act, which is done by the Federal Reserve when they lowered the interest rate. So this is the time where they shortest time, they will have the most gain out from there. Then consumer staple, they will slowly have the peak, okay, and then consumer discretionary, that's where it comes in, because that is the time where people have a better choice, okay, going for a better product, better brand, higher pricing of those goods, okay. So bonds wise, you can even look into bonds, okay, at this moment, right? So of course, all this here, I'm not asking you to put like 100% into one of the asset class, okay? So you have to diversify. So you need to know what is your objective to diversify how much percentage or the ratio to all these different asset class. So this one, I leave it to you guys. So if you know your objective of your portfolio, then you should know how you should do it, okay? So bonds or this, okay, so you this is the time that you can look into it. Financial sector is the time that you can look into it. So next, if let's say you want to catch the recovery time, you want to look into telecoms, okay, info tech, those IT, like those AI related companies. So you don't want to get in there when the market start to move up higher, then right now you can put more portion into financial sector and lesser portion into those IT first, because right now IT is going down. That's where you can start to get some, okay, buy some into it, and then slowly shift, okay, when the bank stocks that you are making, you can take profit at that point when it's close to the peak, then put the fund, allocate the fund, the profit into tech. So slowly grow your tech ratio, and then of course maybe you might not want to sell all the bank's stocks, right? You might want to get some dividends up from there. So whatever you sold, you put like maybe we call it like move your capital, okay, into IT, or maybe basic materials like those steel or those iron, and also like maybe you want to look into telecoms, okay, telecommunications, and then later on into those industry when it's overheat. So as long as you understand how the economic goes, then you can look into all this, okay, sector like financial, telecoms, industrial, and utilities, and then slowly go into each of it, okay? So it sounds very simple, but it requires you to study a lot. Maybe some of you might think that, okay, what are the things that I can invest into it? Because I don't want to study so much of the stocks or individual stocks, okay, in what sector and stuff like that. What you can do is that you can invest in some of the ETF, or maybe some of the unit trusts that is focusing on all these sectors, okay? So you can just move your funds, okay, around all these ETF. They have like financial ETF, they have telecoms ETF, they even have tech ETF, which consists of like maybe like what do you call that, the not NASDAQ, the Nvidia, maybe Apple as well. So that's why these are the things that you, the investment idea that you need to start learning. Is not saying that, oh, you just invest into stocks and stuff like that. You need to learn how to move your money, because this is how financial market is. You move your money and constantly review every 6 months, and constantly update about the economy data right now to understand where does the hot money favor in any of the sectors, all right? So I think that's how to share you the basic idea of this first. So if you have any questions, you want to find out more, remember to leave a comment and we'll look into it, and probably next time we can actually make a new video, okay, to answer your question, all right? So thank you very much for staying here, okay, and watching this video. I hope you guys like it. Remember, like and subscribe, and also follow our channel. Thank you very much. See you again.
Klever Stock, the ultimate financial insight for everyone.